The question is incredibly germane because there were some surprises, as there always are with elections. But I think it depends a little bit on the vantage point. Where are you looking at this from? And so I would maybe look at this along three lines: whether you're a pollster, whether you're an American or a global citizen, and whether you're an investor. So from the standpoint of pollsters, I think this was an incredibly close election. And I think for the most part that this was, we kind of knew this was going to be a nail biter, but most of the national polls had the margin of victory for President-elect Biden as much wider than the current results so far, which could move a little bit into President-elect Biden's favor, but it's around 3 percentage points, which is quite a bit less. And then when you look to the House and the Senate, I think the Senate was largely right. It was again a very close coin flip kind of probability, but we're basically neck and neck here with 2 Senate runoff races in Georgia that likely determine the outcome. Very narrow potential for the Democrats to retake the Senate, not zero, but still very low probability. And then in the House, with the Republicans picking up some seats, I think that was something that was also not on the pollsters' radar screen. From the standpoint of a global or an American citizen, I think one thing that we can look to is that without the civil unrest that was projected, the fact that we had a record number of Americans casting ballots, the fact that this was the highest turnout likely on record for an American election in modern times, goes to show that democracy prevails and that the worries about a long-run contested election without an electoral college result, I think that's also a surprise. And the last, with regards to the markets, there was some positioning coming into the election that would suggest that investors were anticipating united government, meaning that all houses of Congress and the presidency would result in Democratic hands, effectively a blue sweep. That did not materialize. We have likely divided government for a couple more years. So in the 24 to 48 hours or so after the election day, we saw some move lower in longer-term bond yields, a slight flattening of the yield curve, a re-emergence of the outperformance of secular growth on the view that growth was more scarce. Now we have positive news on the vaccine front, which makes it hard to attribute one day's move to the next. But it looks as though that the markets, at least in the few days after the election, were anticipating a slower go at reflation and getting back to that 2019 level of growth. But now with the vaccine developments, still a long way to go there. But we've kind of gotten back to the idea of a cyclical outperformance, inflation trade is steepening the yield curve. So those are the surprises. I would say that, the fact that we had a good turnout for democracy in this election, the fact that it was more narrow than the pollsters had anticipated, and that we're sort of toggling back and forth on this idea of a reflation trade.